What is up, Bitcoiners? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy Monday out there. Today is Monday, May 8th, 2023. And on Mondays, my live stream usually is going over the fundamentals report that comes out every Monday. You can subscribe for that for free at bitcoinandmarkets.com. That's what you're seeing here on the screen. I am live streaming right now on YouTube, Twitch, Twitter, Telegram, and maybe Instagram if it's working. I tried to set it up, but yeah, so you guys can follow me on any of those platforms. Telegram is the home base, t.me/Bitcoin and Markets. We're cutting it up. I probably post in there over the weekend. I was posting probably 10 times a day or something like that, Fridays and Saturdays specifically. So lots of stuff going on. The big news this week right now is Bitcoin under attack? Is the high fees, or is that what we're seeing right now? Is that an attack on Bitcoin? So I'm going to cover that. That was the main topic for this week's fundamentals report. Okay, number 240. I always start off with a meme. Great meme this week from Swan Bitcoin, originally from the BTC Therapist. Just great. Yeah, Bitcoin is against the world. It's me against the world. It's Bitcoin against the world right now. Okay, so snapshot of Bitcoin. We have broken support. Let's go to the chart here. We'll see this here in a second when I go over price, but you can see we're down under the 50-day moving average by a significant portion, going into some support here, but we'll see. If we break down below 26,000, that's when you really have to start getting worried. Okay, back to the report snapshot. Media sentiment is negative. I didn't go with very negative, but it flip-flops between those two right now. We'll see when it is in the bull market. There's going to be a lot of positive reinforcement of the price, especially around the halvings and stuff. There's going to be a lot of positive news items, but right now we're still have negative media sentiment. Network traffic is extremely high, and that is the main topic for today. But the mining industry is stable, and the mining industry is actually really liking these high fees, and we'll go over that. Okay, price is down about $400 from the last fundamentals report. 35.88 for Satoshis per dollar, and 1 Finny, that's my denomination that I like, is 1/10,000th of a Bitcoin, and that's $2.79. Mining sector, but the previous difficulty, it adjusted down just a couple days ago by 1.45%. So not that bad. Going a week before that, a week before the adjustment, it looked like it was going to be negative 3%, and it was only negative 1.4%. So now the next adjustment is supposed to be 3%, or negative 3%. But that could easily change to negative 1% or even depending on what happens with the price and these fees. Okay, mempool is 190 megabytes. It's the highest we've seen in a long time. And when the mempool gets this high, it's going to differ between wherever you're checking this. This is specifically from mempool.space, because different nodes will prune the mempool at different areas. Like they won't go past, say, 100 megabytes or something, or 200, or they'll have different rules, etc., built into each node, and specific, and especially services that do this, like track this stuff. So, but 190 is what mempool.space is showing. Fees for the next block are down over the last few hours to $14 for the next block, and median fees are around $13.87. Lightning Network, now in this environment, you would expect a Lightning Network to really pick up, because it's supposed to be low fee environment there on Lightning Network. There is some back and forth here between how good is this for Lightning Network, and we'll cover that towards the end. But right now we see capacity is down about 12 Bitcoins over the last 7 days, and channels, it's up about 250 channels. So really right in there where it's been for the last few months. When I started tracking this on the report, it was right around these same levels, and that's been several months. This is the most recent thing that I started tracking. So Very interesting. If you guys are new to my content, especially new to the fundamentals report, I have these sections. So I do headlines, price, mining, and lightning. So we're going to go through each one of those. All right. Headlines. Bitcoin, of course, the massive headline right now this week is developing as I was writing this and still is developing. It will be developing for the next several weeks to months. And that is extremely high fees on Bitcoin due to inscription traffic. Supposedly, there was a large Twitter Spaces, which I was not involved in over the weekend, in which all the pump and dump scammers from DeFi and NFTs and crypto were talking about moving to Bitcoin and pumping inscriptions. The reactions I've seen from Bitcoiners is universally negative on the motivation side, but fairly positive on the outcome side. However, I didn't write this, but from the scammers are saying, oh my God, the maxis are losing their minds, yada, yada, yada. I really haven't seen that. Of course, I'm not following every single Bitcoin maximalist or anything like that. But from the people I'm following, the sentiment tends to be fairly neutral overall, negative on these motivations of these fraudulent scammers that are doing this, and positive on the high fees. Okay, there's a lot of positives, and we're going to go over those. There is a thread from BitPain, so we're going to go over that here in a second. Let's continue here. These scammers are explicitly, they've stated this, trying to harm Bitcoin by spamming their garbage NFTs onto Bitcoin. They stated that they are intentionally rekindling the scaling debate to take Bitcoin to, quote, 8 megabyte blocks, end quote. This is just a marketing operation. Altcoin scammers' business model is struggling badly, and they will do anything to draw attention and pivot to new talking points. So yeah, this is all marketing. They thrive off the attention. There's no negative attention for these people, just like there's no negative attention for Bitcoin either. There's no negative attention for these scammers because they're never going to get Bitcoin maximalists or semi-discerning people to invest in these scams. But they're going to reach the bottom 25% of gullible people on the gullibility spectrum, the top or the bottom 25%, and they're going to invest in these scams, right? So any attention is good for them. So, but their overall tactic here is ridiculous on several levels. First off, their high fees are not bad for Bitcoin. They prove Bitcoin's long-term security model. Being on Bitcoin doesn't make their garbage any more viable and any less fraudulent. So they're going to get the SEC is still going to come after these people. Overall, the projects that they're running are still not viable. So it doesn't matter if it's on Bitcoin or what. It's just right now they're paying Bitcoin to run these scams. Notice the absolute annihilation of their fungible alternative to Bitcoin arguments. And let me say that another way, that it's all about NFTs now, not about alternative monies or cryptocurrency. So they're just, killing their old meme to move on to the new meme of being on Bitcoin and pissing off Bitcoin maximalists, which they're not really doing. They are spending a lot of money on fees for this marketing ploy. They will either go broke or be forced to buy Bitcoin to restock. Number 5, regarding scaling. The scaling conflict was a social conflict, never a technical one. And people will probably argue with me on this, but Bitcoin cannot hard fork like this. Bitcoin's hard fork is not a social contract, okay? Or Bitcoin's consensus rules are not a social contract because Bitcoin's consensus rules are individual to the person, to the node. As long as there is the old fork to default to, the old original consensus rules to default to, it will be defaulted to. Period. The new fork has a lot of uncertainty built in, and it cannot It cannot take hold. That's why we know Ethereum is centralized, because they can hard fork like this. They are a social consensus driven from a centralized player. Now, there could be some arguments for pre-Ethereum Classic that Ethereum was more decentralized, which is hard to make because, I mean, it was right after or fairly close after the launch when it was 100% centralized. You know, the IPO or the ICO for Ethereum was 100% centralized. But they can fork like this because they're centralized. Bitcoin can't fork like this because we are decentralized. Period dot. It can't fork from a social consensus. All right. Now, number 6 here, I just point out what they're doing. Attack, attention, sell scams. Their main goal is plain and simple, fraud, not innovation. Same old, same old. If they were honestly about the innovation, they could easily use much more efficient RGB protocol or liquid sidechains, or the liquid sidechain. No, the attention is the goal to drive to innovative crypto scams. So we know we've always known that about altcoins have always been scams, because if this stuff was viable, they would build it on top of Bitcoin, right? Similar argument here. If these things were viable, if they were innovative, they would use the most efficient way to do it, not waste hundreds of dollars on fees. They would do it on RGB or liquid. Okay. Now, this was a good thread from BitPain. There are positives and negatives to this spam. And so I want to just pull this up and share this. So BitPain, Taproot made it easier to spam the Bitcoin blockchain. There is now an influx of spam transactions. The mempool is processing them as designed, and fees are adjusting upward as appropriate. This is resulting in extremely high transaction fees, the highest ever seen on Bitcoin. This has pros and cons depending on what group you belong to. For miners, this is excellent. They're being paid a lot more to mine. For plebs looking to transact, this is bad. It is now more expensive to make a transaction. For hodlers, you are basically unaffected. Yep. And I would say this plebs looking to transact, that is not really the case either. If you are trying to transact low value transactions, yes, this is bad for you, obviously. But let's say you're Michael Saylor, or you're some big fish and you're making $1 million transactions. A $20 fee does not matter to you. All right. So this is not necessarily bad for them. Okay, let's continue. Incentives overall are working as they should. People spamming the blockchain are paying enormous fees to do so. Why are they burning money like this? They are using block space to mint shitcoins via ordinals, which they hope to sell for more than the cost to mint. In effect, this spam is being funded by the shitcoin speculators buying these tokens, who are paying more for them than the minters are paying for the block space. On one level, this is simply economics at work. At the moment, the Bitcoin blockchain is vastly underutilized. So people have found a way to make that space economically productive and are willing to pay for it. Some are arguing that we shouldn't allow spam like this because it raises costs for quote unquote legitimate uses of block space, and want to restrict the ability to inscribe ordinals. This is kind of the central argument here, I think, within the Bitcoin side of the house, not in the fraudster side of the house. They just want to commit fraud. So they want to start a Ponzi somehow. And so, yeah, this is the legitimate debate in Bitcoin. Is there a proper use of block space versus an improper use of block space? I can't solve that right here. I tend to fall on the side that, it's not going to hurt Bitcoin. It's going to help Bitcoin grow. It's going to help Bitcoin find its way into the future. The market force, it's a market force that's going to force Bitcoin one way or the other. So, yeah. All right, let's continue. But what is or isn't legitimate usage of block space is open for debate. Regardless of how you feel about it, this will last only as long as the attack is subsidized by people's appetite for ordinal shitcoins, at which point people will start losing money doing it and will stop. That's true. Now, I want to say something about this open for debate. I don't know what the legitimate reason would be for limiting this, other than maybe that it's creating bloat, UTXO bloat, and it's creating a bloated blockchain. But as like the transaction fee side of the house, where the people are saying high transaction fees won't allow low value transactions, man, that's a hard position to defend. Is the Bitcoin consensus layer for $5 transactions? No. And that has been known for a decade, or talked about for a decade through Bitcoin. So there's no reason that people would, I think, be making that similar debate. They can use Liquid and they can use Lightning. Okay. So anyway, let's continue. This has at least two big benefits, in my opinion. It will make people realize that the low fees we have been enjoying are unlikely to last, and hopefully will shock people into working hard long-term scaling solutions, even if the current source of demand is unlikely to last. The second benefit is that it is a direct subsidy for mining. The transaction period from a blockchain fully funded by the block subsidy is to one funded by transaction fees is uncertain and vulnerable time. Okay, let me read that again. The transition period. Okay, so the transition from being fully funded by block subsidy to being fully funded by fees is a vulnerable time. I mean, that is going to be all of Bitcoin's history for the first 140 years, right? Yeah. Okay. Why? Because before Bitcoin is fully monetized, it won't be widely used as a medium of exchange. Use of the blockchain for purposes other than BTC transactions could help bridge this transition by allowing valuable block space to have alternative uses. Whether this is needed at all is an open question, but is at least a potential benefit. There are definite downsides, particularly for people who rely on low fee transactions and are now paying more. Oh no, I scrolled away. Okay, but it's a free market, and miners sell block space to the person willing to pay the most for it. At the moment, like it or not, that's shitcoiners. I'm generally opposed to censorship-based means of stopping this, as the market incentives should take care of it longer term, even if it's annoying in the short term. I also think it's good to have a stress test of high fees, as it helps reveal weak links for scaling. Very well put together thread there by BitPain. Okay, let's get back to the newsletter. So a block had more fees than subsidy, so lots of people were tweeting about this. I even saw like Jameson Lopp tweeting about this. This is a pretty big deal, and a lot of people were pointing out that yes, the security, just like BitPain did there, the security, I guess, the concept of how Bitcoin security going forward as block subsidy decreases with the halvings is that fees, will get more important. I have a little bit more nuanced take on fees and security and block subsidy. Security, in my mind, comes strictly from fees, and so it's very hard to model the cost of attack for Bitcoin, because you don't necessarily know how fees will respond. So you don't know what the opportunity cost is. You don't know what you're up against. How much incentive will be placed on honest miners to fight a 51% attack, stuff like that. So It's a dynamic security budget. But yeah, eventually fees will have to take over, and they probably will. They'll probably, and maybe, I mean, this is, I think, temporary right here with these ordinals. But in the future, maybe 2 halvings from now or so, we're going to start seeing a lot more parity between fees and block subsidy. So, all right, let's keep going. 421 Bitcoins paid in fees yesterday, and this is via Charts BTC on Twitter. And I just worked this out at 28,000. That's $11.7 million in fees in one day. So this spam is expensive and going to Bitcoin miners. So that's an important point. All right. Binance halts withdrawals, mismanaged coins. The recent price dip might be related to Binance pausing withdrawals. They came out and said it was due to network congestion, but they have been doing a very bad job at coin management. Every night they send out transactions to rebalance their wallets. Well, those have been getting caught in the Bitcoin network and not clearing. I should have said Bitcoin mempool. It is possible they don't have the infrastructure to pay the withdrawals. So if they have enough, Bitcoin stuck in the mempool, they don't want to keep sending more. They will eventually not be able to, pay the withdrawals. So anyway, after I wrote this, I saw that they said, hey, we're going to do a replace by fee, which they should have done the very second night that this happened. But yeah, let me see if I can make this bigger. So you guys watching on live stream, you can see I think it's in this purple here. So they spike up every night. That's Binance moving their coins around or trying to move their coins around so that they can, facilitate withdrawals in their system. And it looks like that wasn't happening. And so they had to pause withdrawals and get it figured out. But that is related to a lightning story that we have down below as well. But we will wait to that until the lightning section to get to that. Okay, so that's all the Bitcoin headlines, macro headlines. Hugh Henry, I shared this with Telegram this morning. Really, there's not a ton. I mean, we had the FOMC last week, but that didn't really have a big effect on the markets or anything. The narrative about the bank failures has gone away or has gotten a lot more quiet. There is still stress, of course, in regional banks, but we haven't heard so much about that in the last, say, 5 days. So I just picked out a few interesting things here. So Hugh Henry, I say he's my spirit animal, and he's crushing inflationistas in this clip that I share. So overall, he says, the Fed is in the business of camouflaged deceit, the aura that they are all powerful. That sounds a lot like what I say. CPI is transitory. I would anticipate in 90 days, we're going to see CPI running under 3.5%. By the end of year, we're going to be close to zero again. So very bold predictions. I think that's possible. I don't know about zero. I think when I figured it out, I think I did that last month, perhaps, or maybe it was in March. And I said, hey, if we just have 0.1% month after month this year, we're going to be under 2%. I think it was by July. So yeah, CPI year over year can crash very, very quickly because in the last 9 months, we've had very low CPI. It's just the first 3 months of this 12-month window that we're in that had very high CPI. And as those fall off, year over year CPI is going to crash. So we'll see how this goes. But overall, I do think that most macro people, and especially most people in the system like Powell and Yellen and those guys, they know that deflation is the problem. It's not inflation. So very interesting time that we're going in. We'll see what happens over the next couple months. This week, we have big numbers, economic numbers coming out of the U.S. We have April CPI, PPI, and the SLOOS survey of banks. So I linked to an article that gives a preview of all this. Current forecast for month-over-month CPI is around 0.6%. That's very high. I think that we'll be surprised. I think it's going to be much lower than that, but we'll find out. And I don't know what day that's coming out. Let me really quick do this. BLS release. Okay. Let's see. CPI is Wednesdays, then PPI on Thursday. Okay. So I will definitely be live streaming that at 8:30 in the morning on Wednesday. So set your clocks for that. Okay. Sluice data is a survey of banks that the Fed does. And they ask many questions, but the two important ones that I want to hone in on and that most people hone in on are lending standards and loan demand. So they ask in the last period, I don't know exactly, it might be every 90 days they come out with these, but in the last period, did you tighten your lending standards or loosen your lending standards? And then they'll look at, okay, 40% of banks said they tightened their standards, right? And so that's kind of how this survey works. And with the loan demand, they say, hey, over the last period, have you noticed an increase or a decrease in loan demand? So the last Sluice report showed a huge amount of tightening of lending standards and decrease in loan demand. That is very deflationary, okay? Because if money is printed in the process of making a loan and there's fewer loans and less demand for loans, then you get deflationary conditions. So this is very important. We'll see what this Sluice data says this week. I'm not sure when that comes out either. Should I Google that real quick? When does Sluice data get released? May 8th. Oh, today. Sluice data is getting released today. I haven't seen it, so I can't report on it, but yeah, I will definitely be reporting on that in Telegram. Join the Telegram, t.me/Bitcoin and markets. And I will be talking about it on Wednesday's live stream. I might do a live stream tomorrow as well. I started talking about that World Reserve Currency History series, and I stopped before I got into the last part 4 that I have written. And I've started writing part 5 again. So maybe I'll get to tomorrow. I might hit part 4 just as a quick live stream. But anyway, let's get into the price analysis from this week's report. Last week, I said we are testing the 50-day MA again. And that's a pretty big sign of weakness. And I would not be surprised if it failed to hold the 50-day moving average. And that's exactly what's happened. It was unable to hold it for very long. And now it has broken significantly below. On Saturday, it looked like it might break out above this pattern, but that turned out to be a fake out. And now we're squarely falling below the 50-day and this pattern. The stock market is holding up better than Bitcoin right now. The dynamic between these two is interesting. Bitcoin has been a leading indicator for the stock market, and the stock market has been a BS detector for Bitcoin dips because, everyone's talking about this coming huge, massive crash in the stock market, and it just continues to be resilient. So since they're correlated, Bitcoin, the stock market can serve as kind of a BS detector within Bitcoin as well, is my opinion. Okay. I do not expect this to be a major dip. 27,000 has been a very strong area for the price over the past couple of months. And that's the green shaded area that I showed a little bit earlier. The red box is where several important support levels come together and the most likely place for a bounce if there is a further sell-off. Okay. Last but not least, the high fees and inscription scandal is initially bearish, and the Binance thing was initially bearish. That's why we see this tiny dip right now. But soon they will run out of Bitcoin to pay fees. At that time, they'll have to buy Bitcoin back. Okay. I didn't do a Market Pro last week, but I will be definitely doing a massive Bitcoin premium Market Pro. That is my premium subscription tier. So guys, check out that. If you go to and markets.com/pro50. You can get your first month 50% off. Okay, mining. So this is probably, I would say mining and Lightning have a lot of headlines, especially because the fees, right? The fees and all that. But so let's see. Mining headlines. Analyzing Bitcoin mining companies' behavior to assess sell pressure. So this was, man, what website was this from? I can just click on this link, but I didn't want to leave this page. Okay, analyzing Bitcoin mining companies' behavior to assess sell pressure. What was interesting about this was that Bitcoin miners have been subjected to the cryptocurrency market volatility. This has resulted in instances where miners have liquidated their belongings, but in most cases, these miners have preferred to maintain their positions. Public mining companies. So this is interesting that we can have public mining companies with data that we can actually, track on a quarter-to-quarter basis. Were observed to be consistent in their behavior. According to Blockridge data, all mining companies sold 100% of their holdings in the latter half of 2022. That is very interesting. All mining companies sold 100% of their holdings in the latter half of 2022, and these are public companies. However, for the first time in over 6 months, the liquidation ratio decreased to below 100% in March, subsequently dropping further to 95% in April, indicating that these companies had slowed down on selling off their BTC holdings. All right, so that's what I thought was interesting. And you can add the fees on top of that, giving them less incentive to sell their mining hordes, right? Okay. Crypto Quant, though, this is another website in Bitcoin that has a bunch of cool charts, and they do have a free tier of membership. You just sign up for an account. So check out Crypto Quant. But they're saying that overall, so this isn't public miners, this is overall, that miner reserves continue to contract. And you can see this blue line here continues to go down in stair steps, but we will see. It's not falling off a cliff like it did at the beginning of 2021. It slowly worked its way up, the miners' reserves, and they start selling off here. We are not back to the lows. So that's one thing. But we'll see. We'll see how this develops. That's overall miners. So this is a different story here between overall miner reserves and public companies. The public miners, their reserves. All right. Next topic for the mining industry. Biden's plan to tax crypto mining. Will Biden's plan to tax crypto mining reduce emissions? Critics say no. The back and forth over the new DAME tax is just heating up. Personally, I don't think it will get anywhere and is a great reason to get Bitcoin's energy narrative out to the public more. It is also funny that it is estimating a net $3.5 billion for the government over 10 years, and that's really just pennies compared to what they're going to, what they would get for that. $3.5 billion is a hollowing out of the U.S. strategic mining capability, right? So that's nothing. Should be $1 trillion. The Bitcoin mining industry being centered in the U.S. goes a long way to guaranteeing that the U.S. is going to be the financial center in the future, going forward for the next century. And you're going to sell that for $3.5 billion? It's ridiculous. It's pennies, really. Okay, cryptocurrency. This is a quote from this article that I linked to in the actual bullet point. Cryptocurrency miners based in the United States could soon face a tax equal to 30% of the cost of the electricity they use if President Joe Biden's proposed budget for the fiscal year of 2024 is approved by Congress. But the proposal has sparked debate about whether it would actually decrease global emissions and energy prices. In the article, Fred Thiel of Marathon Digital, he has a great response, and the multiple quotes from him are really good in the article, but I just picked out kind of this summary quote. Either the admission oh, geez. Either the administration is utterly misguided, or this proposed tax is nothing more than a move to hamper this industry for political reasons, because it is not in the interest of the people, the energy grid, or the environment. All right. Moving on to hash rate, we can see that it is a little bit more volatile over the last week, but overall, it has been extremely stable going back into early March. This is the first difficulty adjustment, negative difficulty adjustment in the last 6. So very interesting. Mempool. And this is where a lot of the attention is, this mempool. And I think it's beautiful, this rainbow chart, because you can see it's fundamentally different than what was happening here. There's a different technique that they're using for these transactions and this minting of inscriptions. They've learned from back here, I think. But yeah, very interesting chart, so you can get a lot of information on this. And also, it's not as high as previously. So this was back March about 23rd or 24th was this peak in the middle of the chart. And we're not back at that peak quite yet. So even though we have all these high fees right now, it's not as bad as even back then. Very interesting on that too. Okay, here is the ordinals. So I've been using this chart. I do link to the source in the report, so you guys can check that out. But I think this is just a guy's, he built this tracker as a project, and it's very, very good. But you can see the recent spike in all of the inscriptions. You can see the spike in March that led to that high mempool back then was nothing compared to today. And the mempool is not nearly as high. So even the miners are learning what's going on. And I think everyone's kind of adjusting to this, which is fascinating to watch. But the total number of inscriptions has not really increased all that much. It did increase from the previous spike, but last week's spike was just marginally higher. So we'll see if that was the all-time high and we go down from here or not. I'll see, or we will see. Okay, Lightning Network. Lots of news this week. So MicroStrategy announces a massive integration with Lightning. They had their MicroStrategy conference there. I think it was in Orlando. MicroStrategy integrating Lightning rewards internally with Salesforce, Zoom, Adobe, MoveSpring to incentivize employees to educate themselves, share their knowledge, hit their fitness goals, and more. So this is a very big announcement for Lightning, but so far it has not affected Lightning all that much. We'll see, because like I said, I'm tracking the number of channels and the capacity. The number of channels on this, man, I don't know exactly the details, because if this is going to be centralized, we're not going to see the huge boost to the Lightning Network, in the statistics, maybe in the capacity, but not necessarily in the channels. So anyway, I would be interested to see the details of this, but it is a huge boost to demand overall, and it's marketing for Bitcoin. So I think it's great. Okay, Binance adds Lightning Network support due to high fees. So they did tweet out earlier. Let's see. It linked to the wrong. Oh, no, it didn't. To prevent a similar occurrence in the future of the withdrawals being paused due to the congestion on the network, our fees have been adjusted. We will continue to monitor on-chain activity and adjust accordingly if needed. Our team has also been working on enabling BTC Lightning Network withdrawals, which will help in such situations. So it doesn't say specifically that they're going to do it. They have been working on enabling it. So we will have to see, but that's a pretty big piece of news. I mean, Coinbase still has to add it. They've said they're going to add it. Other exchanges, I don't know all the different exchanges and which ones have or haven't. I think it's about 50% right now. So we'll see as that gets more and more usage, I mean, that's just going to be good for the Lightning Network, and that's going to have a synergistic effect with the MicroStrategy thing and all of these other news items that we're reading here about the Lightning Network. Okay, great comment from an old school Bitcoiner, Cal Torpy. Cal Torpy was on World CryptoNet back in the day, not too often, but he was more of a writer for some of the news outlets in the Bitcoin space back in the day. But he has a great comment here. So Bitcoin companies were forced to make changes when transaction fees were roughly as high in January of 2018. Batching and SegWit were the main improvements added then. Layer 2 options like Lightning Network and federated sidechains needed this time around. And I agree. I don't know why I don't know why Liquid Network has so little usage. It can do everything. And sidechains are just obvious for nation states and things. So when you think about a peg, they used to have a peg for gold, right? At $35 or $20 an ounce. Well, you can peg your digital currency or your central bank digital currency or whatever to Bitcoin through a federated sidechain. So that's what I would do. And that's what they're probably going to do, because you can have different rules within your sidechain. And as long as it's using Bitcoin, you can have, you can unpeg it, or you could trade back and forth. It's using the Bitcoin as the monetary unit and then just having your currency denomination on top. It makes so much sense that I can't see how they wouldn't, at least a lot of countries go that direction, to having their own national elements sidechain. Not Liquid, but an element sidechain, which is what Liquid is built on. So, all right. Last news item here is a well-respected Lightning dev, Hampus, points out Lightning Network limitations in high fee environment. All right. He says that Lightning completely ceases to work if in a high fee environment, because HTLCs below the dust limit won't be possible to settle on chain. So if the transaction fee is $100, it means every payment under $100 will be trusted and insecure. We need to talk about scaling, not playing around with ordinals. So interesting. I don't know the technicals here, but it sounds like the dust limit automatically adjusts with the transaction fee. I guess that would be if you wanted to get included in the blockchain, you would have to have a transaction fee. So interesting. Okay, so you can't close a Lightning channel or even use old school rebalancing of Lightning channels with fees this high. And that's very, very true. And we've known about this for a very long time with Lightning. One argument against Lightning from the very beginning was it was going to become more centralized, not completely centralized, but hub and spoke. So there's going to be big nodes on the Lightning Network that were well connected, and then you were going to be connected to these major nodes. Then they helped you balance everything. They helped you keep your channels right, because and they charge a fee for their service of that. So this has been known for a very long time, that this is probably going to have a somewhat of a centralizing nature to it and a hub and spoke. What do I feel about that? It would be better if it didn't, but I mean, like he says, these are hard problems, and we will, if there's enough incentive, we will figure it out. And long term, we will figure it out, because Lightning Network isn't the only thing possible, right? So 10 years from now, someone could come up with something even better. They already have Fed emits, and what's the other thing? I can't remember the name now. That's it's like a private Lightning network or something. But I mean, there's alternate technologies that come out about once a year. You hear of a new thing that people are working on, and maybe in 10 years they come up with Lightning Network 2.0, and it just explodes right away. And so that we don't know what the future holds, but if there's enough incentive, we will figure it out. Well, this is what I say. So my take on this is, like Kyle says above, this era in Bitcoin will force improvements. It also exposes the weakness of courting low-value transactions as the killer use case for Bitcoin at this time. Those things will come, but it is much easier to do and much harder to attack high-value settlement. That's, I think, an important point. Everybody talks about Africa and poor countries and low-value transactions on Bitcoin and Lightning. Yes, okay, I have nothing against that whatsoever. But that's not going to get us to mass adoption. What's going to get us to mass adoption is when the millionaire and billionaire class adopt Bitcoin en masse, right? The high value settlement is unaffected really by these high fees for the most part. So that is what's going to lead to hyper Bitcoinization. So yes, this exposes the weakness of courting low value transactions as the killer use case. Those things will come in the future. When everybody, if the billionaires if they want to stack Bitcoin, they're going to fund and create things that you can use your Bitcoin easily. So these things will come, definitely. And open source is such a huge force right now in the world that it can't be stopped anyway. If there's enough incentive, people will do it. Okay, so let's take a look real quick again at the charts. Bitcoin's selling off again right now, 27,474. Let's take a look at DXY. DXY is slightly green on the day. S&P 500, slightly green on the day. This is interesting. Again, this is a BS detector for these Bitcoin dips. Let's take a look at NASDAQ. Is closing at another yearly high again today. This is interesting. Oil is up from the last couple of days, but look at this. It has completely crashed. It completely crashed over a 2-day period, and now it's kind of fighting its way back up. But if you look at where it opened on May 2nd, it is still significantly below that level. It opened about 75.60, and now it is about 73.10. Okay, what else? Let's take a look at the 10-year. Nothing significant to report. Back in its happy place. And how about gold? Gold significantly off the recent highs. Still looking pretty strong. All right. That's going to do it for today, guys. Thank you for joining me. My name is Ansel Lindner. Check out bitcoinandmarkets.com to sign up for the free weekly newsletter, the Bitcoin Fundamentals Report. Also, check out everywhere where I live stream: YouTube, Twitter, Twitch, Telegram, and the Telegram is t.me/Bitcoin and Markets. All right, guys. Thank you. Have a good one. Bye.